Hello and welcome back to The Note. Are companies about to start spending money on capital expenditure once more? It's been one of the big conspicuous lacks over the last few years as the economy has tried to recover from the global financial crisis. Now there's this very interesting survey which has been produced by Deloitte that suggests that yes, CFOs are indeed getting ready to do much more Capex once more. With me now to discuss it is Deloitte's chief economist, Ian Stewart. Ian, thanks very much for joining me today. Let's start by looking at one of your key findings. It looks as though chief financial officers have a lot more appetite for risk at the moment. Take me through this finding, how you got it.
Yeah, what the chart shows, John, is the proportion of CFOs in our survey who say now's a good time to take risk. And I think this is probably the biggest question that chief financial officers face in allocating capital. Do they want to take risk? In December 2008, that proportion was 1%.
Right.
It's now 57%. That's the highest since we started doing the survey back in the latter part of 2007. And I think that chimes with the results of the rest of the results of the survey, which suggests that expansion is now a top priority. So I think what we've seen is the risk appetite in financial markets has now spilled over into the behaviour of capital allocators in the real economy.
Okay, and just to be clear, they are thinking about spending money on organic expansion rather than on M&A or on share buybacks.
Well, we asked them actually what they want to do in terms of expansion, and I think what we're seeing is a combination of enthusiasm for organic expansion, capital spending, hiring, even discretionary expending, which is the sort of thing that CFOs generally don't like.
Right.
Even that they're relatively optimistic on. So I think this suggests that corporate spending probably will be unlocked in 2014.
And why exactly, do you have any clue as to why they're getting more comfortable? Is this to do with the Eurozone or the States? Why are they feeling more comfortable?
I think what we clearly saw during the crisis was that cost control was the dominant priority for big corporates, and that led to a collapse in capital spending. Now I think that clearly reflected a combination of capital shortages, uncertainty and economic weakness. What we're seeing in the survey now is that corporates have plenty of access to capital, big corporates do. Perceptions of uncertainty amongst our panel have collapsed in the last year, and of course we've seen quite big upside surprises on UK growth. So I think the kind of external environment has made it much more favourable to think about expansion now.
Okay, now let's take a look at what the market is expecting, and it looks from these figures as though this is what everybody is not only wants but expects. Tell me how you derive these numbers.
Yeah, these are consensus or average expectations for capital spending in 2014 compared with 2013. And I guess the message is that pretty much everyone expects that across the industrialised world, business investment capital expenditure will be one of the drivers of growth this year. And of course in the UK, policymakers are making the big bet that the recovery is going to broaden out from the consumer sector to the corporate sector this year. So that expectation is certainly embedded in consensus forecasts.
Although plainly, judging by the numbers for France, the Eurozone, the problems of the Eurozone continue to depress sentiment or forecasts for Capex there.
Yes, absolutely. And I think what's interesting is the UK, the contrast in the UK is most pronounced. So we've had this tremendous squeeze on capital expenditure. It fell almost 30% during the recession, scarcely any recovery since. And now the expectation is that at last Capex will bounce back. I would have to caution actually that this has been the expectation for about the last 3 years and it hasn't been realised. I do think now things have changed.
Okay, now let's look very finally at what institutional fund managers want companies to do. And as far as I can see from this is the Merrill Lynch survey that's been going on for many years. It looks as though they actually want companies to do Capex now, which hasn't been the case for a while.
Yes, I think this is fascinating because I think this is a counterpart to the thinking of the corporate allocators of capital in the economy. And if you look at this chart, you can see that back in 2008-9, the only thing that institutional investors cared about was improving balance sheets. Our CFOs at the time were telling us that their big focus was on cost control, building up cash. So corporates responded to the pressure from capital markets. Now, what I think is fascinating is that increasing capital expenditure is the top priority for corporates. So I think the interesting thing now is that capital markets want CFOs to invest. A lot of survey evidence suggests that there isn't abundant spare capacity in the economy. Capital is cheap and risk appetite has risen. So I think this does all add together to make a story where it's hard to believe, given how low Capex is at the moment, that we won't see a rebound in 2014.
Okay, and thank you very much indeed. I think that's all a very cogent case. It really does look as though Capex is ready to take off again. If you want to read more, I have a column on this subject in ft.com.